Guys, welcome to the new property show. Starting with you, Josh. So, mortgage broker.
Yep.
What did you do prior to being a mortgage broker?
8.5 years at ANZ, then took a couple of years out to do real estate in South Yarra. Got a pretty good all-round knowledge out of that, and then started up my business about 5.5 years ago and haven't looked back.
So a lot happening at the moment, but I guess what is really coming up for a lot of people is, I wouldn't say you guys, but I would say the banks offered something called fixed rates. They're now coming out of it.
Yep.
What's happening there? So massive jumps.
Yeah, a lot of people are starting to realise that the last few years have been really golden. Something we haven't seen in 125 years of banking in the country is rates around the 2%, even high ones. And now we're starting to see a lot of people's rates jumping to a minimum around 6%, and your average home loan, 500,000, sort of jumping from maybe 2,200 a month in repayments up to your sort of 3,600, 700 mark, which puts a lot of strain on family budgets. So having to talk to a lot of people just about understanding the shift, especially people that have only been in the market for probably the last 2 years. People that have been in the market 10 years have probably seen these cycles before, so the reality for them is a little easier to accept. So just giving people a lot of advice, and I think a lot of people want to see a silver bullet. Unfortunately, the best advice is just, if your fixed rate's coming to an end, work out what your repayments are going to be, start paying it from now, so there's less pain when you rip the Band-Aid off.
And what about refinancing too? So, so obviously you've accumulated some debt, but why are people refinancing? Obviously I know it's a topic we want to talk about, but why would you refinance? At
the moment, to be honest, most of the major lenders that you want to be working with, probably there isn't too much advantage to refinancing. At the moment, the cashbacks have all been taken away, and it's really started to stabilise that market. In terms of, ANZ throwing 4K, Bank of Queensland maybe 3, Commonwealth 2, it's all dried up. You've got ANZ with 2 and not many else offering too much more. But why refinance at the moment? I'm finding a lot of my clients maybe in the low doc space, whether I've set it up or someone else has, that's drifted quite a deal. So what we're trying to do is bring that back in line and maybe find some more suitable lenders that I've sort of come to terms with over the last 12 months.
To make it more sensible.
It weren't available maybe 2 to 3 years ago. So a lot of the time in the low doc space, there isn't as many options, and it is quite hard to move, but been finding some clients have been saving up over like a full % at the moment on what they were on.
So you're quite personable with your clients, you're building relationships. Do you catch them up with them after? Do you take the phone call after hours? Yeah,
all the time. Monday to Thursday, I make myself available 9 till 9, realistically. Clients need me, I'm available, but I make no time on the weekends, given that the banks are shut. Make sure it's about family and having that balance. Otherwise, and the clients benefit from that too, because no one wants that stale, crusty old broker that's, pushing himself to the nth degree. You need to have that balance, otherwise you're not on your A game when you're at work. To
be personable anyway, you have to actually need to have that relationship with the client.
Yeah.
And you could also still work, but in a different way. You like a game of golf.
Yeah.
You like a barbecue, like a beer. So you actually can spend that time investing with your clients and getting personal with them.
Yeah.
And a lot of your business, from what I hear, is referrals. So I just say it's relationship based. And
Absolutely.
A lot better than what you're doing with real estate, where it's the other way around. Monday to Wednesday's fairly quiet, and Thursdays through to Sunday, your phone's ringing. So really it was my guess is a lifestyle change as well you moved?
Yeah, absolutely. It was wholly and solely that. So, and funny you mentioned relationship broking. That's pretty much how I describe myself to my clients. I'm not in it for one transaction. I don't want to write your home loan today, never hear from you again. I want to build a relationship and a foundation for the next 20 years. If you're looking for one and done, then maybe another broker's the right person. But it's
probably, probably where I hear that is you actually care about your clients and you don't want to let them go because you've invested that time and you genuinely want to see them get ahead. And that's obviously one of the reasons you're on the show today is I've heard about the relationships that you create with others and great feedback obviously from Steve as well, so I always get you an extra point. So I really want to just flip over to you, Steve, is how are you guys working together? So obviously you're doing predominantly a lot of asset finance. In your field at the moment with asset finance, are you dealing with bad credit? How do you deal with those sort of guys?
Yeah, so I mean, we at Speaking Finance, we do kind of the opposite of what Josh is doing. He deals with the property, and we deal with everything else. So, and coming across that with the asset and equipment finance, there's a lot of people who have bad credit for any number of reasons. They could be have been forced to with the recent rate rises and just other things, and perhaps maybe they got made redundant or they had something go wrong in their lives, and they had to go into hardship, or they fell behind on a couple of bills. And with comprehensive credit reporting being so on key at the moment, with credit files being updated and things like that, you're seeing people are falling behind, and previously they may not have been punished for that, but now they are, while before it would only be once a default was listed on the file. But now you're getting a situation where there's no defaults, but they're falling behind, and that score is being dragged down really aggressively. And they're people just, it's circumstantial. So when I talk about bad credit, I talk about the importance of painting a picture, right? Because when you're dealing with a pretty straight, clear-cut situation, I might have a couple of discussions with someone, I give them a quote, then they take the finance and they go. But with bad credit, there's so much more that we need to understand, and we need to ask the clients, and we probably have better relationships with people with bad credit.
And what number would that be? So I know there's a credit score system. It goes up to 1,000. Or it goes up to
1,200.
1,200.
If I'm being honest, I've seen like one or two that are over 1,100. So it's basically an unreachable.
It
kind of like the bell curve, right? It's an unreachable thing.
You've got to have a challenge.
But it's like the bell curve, right? Where most people are going to sit, and with premium scores are going to sit between kind of 800 to 1,000, and like 1050 is realistically the upper limit of that.
And what about a 400 starts to get into some dangerous territory, doesn't it?
Yeah. So anything south of 400, you're in a lot of trouble. But people will say, things like, oh no, I have a poor credit score at 600. Now, don't get me wrong, 600 is not something you celebrate about, but anything kind of north of 600 is generally going to get what you need. 600
gets your deal across the line.
Yeah, correct. Once you start dropping below 600, then you get in a bit of problem. But if people understand, and I may go a bit math heavy, but understand the exponential graph where it talks about if you're up at this kind of high 1,000 score, or even the 900 score, extra hit or damage that's caused doesn't factor as much, but once you get to that 600, one extra
really
hit,
quick.
bang 50, bang 50, and that's when you really start to get into the
so you're going
trouble.
under attack.
So you kind of, when you're bad, you can be worse very quickly, but when you're good, you don't drop out of good very quickly.
And what other conversations are you having at Speaking Finance at the moment? What else is coming up with your clients?
Yeah, so we're always having those discussions, talking to people about the low doc solutions. Now, for the people at home, the understanding is that low doc doesn't mean you provide me no documents and you put your name on a napkin.
I thought it was called no doc.
Yeah, no, it's not quite no doc, but yeah, providing the basic details of your identification and certifying who you are, but it just means you're not required to provide financial documents, or maybe you're required to provide a lot less in the way of financial documents. So the standard is going to be last 2 years tax returns and financials, accountant prepared, right? But then there are lenders that will allow us to either waive those entirely, or they may just provide a recent BAS or say 6 month bank statements. So there's different ways to move around those and different ways to achieve the same outcomes. But what we're probably, before we were saying you're either acceptable or you're not, we're now seeing a split where you're going, people with low doc are now almost being kind of punished a little bit because the rate is a little bit higher. Well, it's that discussion, and I'm having these discussions now every day where I'm asking people, have you actually got financials? Because they kind of got trained over a period of time, let's do low doc. And I said, have you got your financials? I said, well, I do. And they said, well, what are the figures? And they'll say this. And I said, well, we can afford the loan on that. And we have more flexibility. We can go to different lenders and better lenders.
It just sounds good for them to say low doc.
Look, there's a certain degree of no crack on all accountants, but some people don't like dealing with their accountant. They might love what they do, but they hate having to deal with them because it's hard and it takes time and trying to get different documents. But if just a little bit of phone call, a little bit of email is going to save you 1 or 2% on your rate, or potentially even more, or give you access to a better product, then it's worth doing. So I'm having a lot more of these discussions to split those up a little bit.
Fantastic. So it'd be great to have you back to discuss credit files in more detail.
Yeah, absolutely.
And we'll speak to you soon.
No worries. Thanks for having us again.